Okay, just get me for now. Anita's coming later. It's past 4 o'clock, day 2. So I think everyone needs to stand up, get some energy in the room. Stand up, please. Bo was talking about self-transcendence. I know nothing about self-transcendence. So let's talk about Netflix and Netflix shows. Please stay standing if you've heard of this show in the last couple of weeks. Okay, wow, those marketing. Few out there, but most people have heard of it. Please stay standing if you've seen at least one episode of this show. Okay, I thought we'd get more. But that's still a good number. And please stay standing if you've seen it all the way to the end. Okay, so there's 6 of us. We can talk later about the plot and the premise. Okay. Everyone can sit. Thank you. If you haven't seen this, it's pretty much everywhere. It's the #1 Netflix show globally right now. It's the #1 Netflix show in the US right now. I watched it over the last couple of weeks with my kids and my wife. And without giving away the plot, because many of you haven't seen it, it's really about desperate people doing desperate things to win money. And they do this because they don't believe that they have any options in the real world. Of course, it's fictional. At least I hope it is, because it's pretty grim in places. It's fictional. But the show is shining a light on the very real issue of economic inequality that is surrounding us today, including here in the US. And it's really shedding light on people who may have jobs, but they're just not earning enough to make ends meet. And the system just isn't really working for them. So the reality, fortunately, is not quite as dystopian as the show presents. But it's still pretty grim for many people in this country. American employees are very stressed, financially stressed, and they need our help as employers. My background, Fred kindly mentioned SoFi. I came to the US in 2010 to go to Stanford. I was not on a full scholarship like Bo, so it cost me a hell of a lot more than nothing. But I was okay, I could afford it, but I was pretty horrified by the level of student debt that was out there, both among my classmates and in the country at large. So tried to do something about it and started SoFi, which our first product was student loan refinancing, and we helped people to save money on their student loans and save them many thousands of dollars. And as Fred mentioned, the company went public this year, so it was a good story. I've had a good run. But I was always aware I wasn't helping everybody who needed it. SoFi's business model was mainly FICO scores above kind of 680, upwardly mobile, 6-figure income type people. So there was always a big section of society that we weren't helping, and I wanted to make sure the next thing I did was helping a broader group of people. So Salary Finance, the organization that Anita and I work for, it started in the UK in 2016. I met the UK founders who at the time were expanding to the US, and I became the CEO of Salary Finance Inc. in the US. Fred gave you a bit of the background there. We're trying to get people out of debt and into savings. And it is similar, as I've explained it to everyone I've met here over the last 2 days. Everyone says, is it the same as what Safwan's doing? And I don't know if Safwan's still here, but we know each other very well. It's kind of similar to Pay Active in the sense that it helps people with their money, but it takes a slightly different approach. We do it in two main ways. Firstly, we try and help people to save automatically from their payroll. We enable that. And secondly, we help people to borrow at more affordable rates than they otherwise are paying. Too many people are paying hundreds of % with payday lenders. But through all of this, we're really, the purpose we're here today is to talk about our role as employers. As employers, we can be a force for good. And as employers, we can help our employees. So we want to dive into that. We called the session, What Baggage Are Your Employees Carrying? And I want to pass over to my colleague, Anita. So Anita's the Chief Development Officer of Salary Finance. In a previous life, she was the president of Operation Hope, a nonprofit providing financial literacy, empowerment, and economic education. Her bio is in the book, but one fact that is not in the bio is that in a prior life, Anita used to be a dancer in Las Vegas. So on that note, Anita.
Hi, everybody. Not what I expected on my intro, Dan. Thank you. We just had this heady session around self-actualization, and up here's an anthropologist who was a dancer in Las Vegas. Oh, my God. The only thing I can think is Dan sat at home and said, let me look at her bio. JP Morgan Chase, boring. Occidental Petroleum, boring. Cleveland Clinic, boring. Dancer in Las Vegas? That's kind of fun. But I'm not sure how that translates in the Queen's English. But in this room now, I know all of you are looking at me very weird. So the truth is, in this authentic conversation, yes, I was a dancer. But the other truth is I was a fraud. And I say this because I am extremely passionate about financial well-being, about financial dignity, about financial inclusion. But I was always too embarrassed to share my story. I never had the courage to say, this is why I'm so passionate about it. So today, actually, I don't think he's here right now. But the only person I told it to 18 months ago, life comes full circle, is David Gardner. So I am grateful to David because I'm going to share my story today with you. So I was homeless for most of my life. I lived in about 13 different cities and at least 30 locations before I was 15 years old. We couch surfed, we floor surfed, we lived with family, we lived with friends. I have seen the inside of so many of those cheap, weekly motels and buses and shelters, and that was my life. My parents didn't have financial literacy. They were always kind of in search of what's the next thing that could get us to stability. They never found it. In fact, at 11 years old, both my parents disappeared, and I have a brother and two sisters. I didn't know where they went. We were in a trailer. They didn't come home. It ended up that my dad was off in search of the next venture, and my mom had a nervous breakdown. But nobody even knew the kids existed. So, by the way, I know there's a lot of food services folks here. I cook a mean baked potato, and I can, cook some spaghetti. But the point in all of this is, at age 15, my life changed. And it changed because Dad decided to throw us all into a U-Haul and drive from Pennsylvania to Las Vegas. And no, I wasn't a dancer at 15. But we got to Las Vegas, and we lived in that U-Haul. I hope U-Haul eventually found it, but we were at a rest stop outside of Las Vegas and living in there. And you know what? I got a job. We needed money, we needed food, and guess what? McDonald's hired me. Joe would appreciate it because I had no identification. You kind of have to have an address as a prerequisite for identification. So I had nothing. But this manager at the McDonald's on Maryland Parkway leaned in and said, "How can I help you?" He helped me get an identification. He gave me food to take home to the family. He eventually surrounded us with all of the support services we needed. He connected us to an apartment. I mean, this is an employer, the first conscious capitalist I ever met. I had no idea what the words were, of course. But he didn't have to do that. But at that moment, he changed my life. And he changed my life because he gave me dignity. And he gave me alternatives. And he showed me an entirely new path. And I'm hopeful that today, that's what we're going to show you, because I believe that the only way to scale community uplift is through employers. I've worked for a long time in the nonprofit sector. The only way to do this is with conscious capitalist employers who actually care and look at employees as human beings. So in the back, when you leave here, by the way, I'm going to share a lot of data. At Salary Finance, we do proprietary research each year. We publish it in something called Inside the Wallets of Working Americans. I'm going to share with you some of that data, contextualize it within my life, and contextualize it within the stories of the people that we talk to as we do this research. But also, I'm going to share with you that, my story isn't unique. I've met people in this room who have experienced things similar to what I've experienced. And there are so many employees right now who live on the edge. 67% of your employees are financially stressed. And nearly half of them are going to run out of their retirement before they retire. They don't have money set aside. And they're just struggling to make ends meet month to month. And sadly, most of them are unprepared for the next financial shock. The statistic that hit me the most was that 50 to 78%, depending upon your industry, of your employees are living paycheck to paycheck. That could be 3/4 of your population, and you don't know it because, like me, they may not want to share it. They may be embarrassed about sharing that story. But it's not just a low-income issue. It's just not. People like my family, 28% of employees making $168,000 a year live paycheck to paycheck. That might be a fairly surprising statistic until you start to peel it away and think about they may have kids in college. They may be taking care of aging parents. They may have a young family. They may have no financial literacy and are trying to figure out how to make life work. So they need help as much as we do with other employees. I'm going to introduce you, though, by the way, to our data through people I've met. So let me introduce you to Eugene. Eugene's one of my favorites. He's a line manager at an automobile manufacturing plant. And the plant last year, sadly, he and his brother Joe both work at this plant, and the plant last year laid people off. Joe got laid off. Joe had no money. Joe had no savings. Joe had a small family. Joe had no credit to turn to. They lived in a small town just outside of Reno. And Joe had to move in with Eugene. So Joe and his family became like my family, moved in with Eugene. And Eugene became a statistic because nearly half of your employees helped people last year, helped family and friends. And in fact, 33% of them depleted all of their savings in the process. It's a pretty sobering thought. And if you'll play along with Dan and I, there's an idea here that employees bring this baggage to work. And a bit of that stress and that baggage comes in the form of, well, obviously dysfunctional families, because we're missing an L here, but come into the support of families. It's my family. I'm sure some of you at least can relate. We'll have drinks later. And there's also Rosie. Rosie is one of my saddest but maybe most favorite stories to tell. Rosie's a cashier at a grocery store in Houston. But Rosie is also one of 24% of women who suffer from domestic abuse. And so she's the one working. She's the one trying to make ends meet. But like other women, like 36% of women, all of the credit that she has is delinquent. And if she wasn't afraid of getting a beating next week, she'd probably file like 7% of women do for bankruptcy. But she's abused. She's in a situation. The week before we met her, she had taken a beating just for paying a bill late. She's got consecutive payday loans, has nowhere to turn, but her employer has no idea about any of the pieces of that, whether it's the domestic abuse or the financial stress. But Rosie's not alone. And you know that 70% of women lack emergency savings? 70% of women. That's compelling. And 57% of people of color. So think about that stress that comes to work and the baggage that those employees bring. Oh, look, it has no savings. See, the savings are gone. And then there's James. James is a technology professional. And he might be one that you might not think about because James' son, James makes pretty good money, but James' son needed an MRI. But James didn't understand what it meant to have a high-cost deductible, didn't understand his health care plan, and was ill-prepared. He couldn't afford the MRI. So he thought, I'll just borrow from my 401k. That would take way too long. His credit cards were maxed. Again, alternatives were limited. He didn't have these out-of-pocket medical expenses. He was one of that group that was making clearly $168,000 a month, but had nowhere to turn. Here's another one of those statistics that maybe makes me lose sleep at night, but 57% of employees who have this fear avoid medical care because they're worried about the cost. I mean, that's maybe the saddest piece of the day. But I'm sure we have one more suitcase that says medical debt, or at least medical something. Look, bravo. I want a round of applause here for Dan. And lastly, there's Karen. Karen lives in Atlanta, and she's a supervisor at a call center. She's got 4 kids, and Karen goes to work every day diligently, takes the kids with her when she can. She's working so hard to get things done. Karen's refrigerator broke, and Karen didn't have the money to buy a new refrigerator. Karen didn't have the credit to buy a new refrigerator. Karen didn't have friends and family that she could turn to like James could to get his covered. She had nowhere to go. When I met Karen, her answer to all of this was a styrofoam container in her kitchen filled with ice so that she could put the food in it to take care of her kids and keep it cold. And when I asked Karen, why not discuss it with your employer, guess what Karen said? I'm afraid. Where's Linda? It was that fear, that absolute terror. And do you know that 54% of employees are just uncomfortable talking about money on the job? But like me, I would never have told an employer anything about my financial situation because I was in that group that says 30%. 30% of employees think that it could lead to dismissal or affect your promotion or promotability because it's a sign of bad character. So we have framed this context. Oh, there's another bag too. And all this baggage that employees bring and all this stress that they bring comes to the workplace. They're not parking it outside the door when they come in. But the situation is critical. And when we talk about doing uplift and when we talk about creating financial inclusion, we have to think about this. I was a senior vice president at Chase. I was 27, 28. I was awarded options. I had no idea what they were. I had no idea what to do with them. But I was, at that time, still living paycheck to paycheck because I had no foundations. I didn't have them in school. I didn't have them from my family. I didn't have them from the environment. So we're not alone in this. And I believe that financial well-being and all of us coming together to address financial well-being is where we need to be with our next moment. And I think Dan's going to share the next moment with us. Yep.
Thanks, Anita. So just building on, before I get to this one, building on something Anita said there, I've spoken to a lot of people over the last couple of days, and people have been rightly proud of the fact that they didn't have to lay anybody off during the pandemic, and that's amazing, and I congratulate every one of you. But as one of Anita's stories showed, even if you stayed, if you kept people employed, even if you paid them the same money, maybe you gave them a pay rise, the fact is many of them were supporting brothers or sisters or kids who lost jobs, who got sick, who had to take time off. So very often, hopefully the message is kind of getting through, very often this stuff is just not obvious to the employer. And when they walk in the office or the factory at 9 o'clock, they put on their smiley work face, but behind them there's just a lot of stuff that we're not aware of. And I realize I'm not going to get a job as a game show host due to my bad performance, but this very crude prop is supposed to represent that. It's going to get better, I promise you. There's some good stuff coming. But this is the study that Anita mentioned. So there are copies of this outside. There's no sales pitch in here. It's just measuring across 3,000 Americans what they think about money and how stressed they are about money. And there's about 50 pages in there, but this is probably the most important one. So we say here 42% of people said they were financially stressed. And depending on which report you look at, it's 40, it's 50, it's 60. In a way, the number doesn't matter. The exact number doesn't matter. What matters is the difference between those people who are stressed and those people who aren't stressed. And that's what the rest of this blue circle shows. So if we take the 42% of Americans who said they were stressed about money and we compare it to the 58% who aren't stressed, then the differences are really stark and quite worrying. I won't read them all out, but just to go round, those people who are stressed about money are 4 times more likely to feel general levels of stress. They're 9 times more likely to have sleepless nights. They're 4 times more likely to have troubled relationships with coworkers. On the left-hand side, they're more than twice as likely to be looking for a new job, really because they're just searching for that extra dollar, that extra $1,000 a month, whatever it is. And they're also, this is based on their responses, they're 2.5 times more likely to be unhappy with their job, but planning to stay anyway due to a variety of reasons. So there's a lot of bad stuff there. And actually, we didn't have enough space on this slide, but the link between financial health and mental health is a very close one. So people who are stressed about money, if I remember the statistic, are 9 times more likely to have suicidal thoughts. So mental health, financial health, physical health, it all kind of fits together. So as an employer, I hope, and I'm preaching to a safe audience here, that there's a moral responsibility here to try and help your employees. But actually, even if you don't care a jot about the people who work for you, there is a business reason. There is a bottom line reason. And that reason is all of those stats there, they contribute to lower productivity, higher turnover, higher training costs, higher onboarding costs, et cetera, et cetera. So we've estimated it out. It ends up being about 13 to 18% of salary costs. So you're not going to be able to, we had a conversation at lunchtime, a few of us, there isn't a magic wand out there that you can just wave and take away all this financial stress and get back 13 to 18%. That doesn't exist, not yet. But at least you can chip away at it. If you can reduce the financial stress of some of your employees, you are going to save money in terms of hiring and training, etc. I'm assuming that many of you have seen the Edelman Trust Barometer before. It's a report that's released every year to show which institutions have the trust of the public, and it's worth taking a look at. There's 20 or so pages for the US. I've pulled out 2 slides. This is one of them. In general, politicians and the media are kind of sinking downwards, but business is staying strong. And in this slide, business is showing, this is the 2021 report, it's the only institution seen as both competent and ethical. It's the only one in that top right quadrant. You could argue it should be a bit further out, but at least it's in the top right, which is more than the rest. So that's good news for everybody in this room. People generally trust business. What's better, though, when you peel back the onion, is they trust their actual employer, the employer who they work for, more than business in general. So if you look at the numbers on the left, ignore the country comparison with the blue bars, but the numbers on the left, you can see the numbers that we just saw. Business, yes, it ranks above NGOs, it ranks above media, it ranks above government, but actually the company that I work for, the employer that I have a direct relationship with, scores 72, much, much higher than business in general. So people trust you. They trust you as an employer more than the media, more than the government, more than business in general. And that trust is huge. It means that they will listen to you when you talk to them, and it means that they will take advice from you when you give it to them. So bringing it back to financial wellness, it means that you are in a position to help, and that's a great thing. I added this slide when I was on the plane on the way here, flying in from Boston. And it's an email that I get, and I've changed the numbers just to, because I don't know everyone that well yet. Next year, I'll be sharing the numbers. But I get this email I think we get paid every 2 weeks. I get this email every 2 weeks, and I hit delete within 3 seconds of seeing the email. I don't even open it. And this email is telling me about my 401k contributions. The reason I delete it is because it tells me the same thing every time. It tells me that I'm contributing X percent, which relates to Y dollars, and it tells me that my employer is matching. But that's the beauty. The fact that I hit delete, the fact that I don't need to think about it or worry about it, the fact that it's automated is the beauty of that system. And whoever kind of came up with it deserves a round of applause, because most people now, if they're lucky enough, that 401k contribution just happens automatically and they don't think about it. They don't miss that money. I can't forget to make a payment. I can't be late to make a payment. It just happens. But as Anita showed, people's baggage that they bring into the office is not really about retirement. Yes, everybody should be thinking about retirement, and it's great that as employers we're helping them with that, but that's not the thing that keeps them up at night. It's the short-term stuff that keeps them up at night. And that's the stuff that I believe employers can have a role in playing a bigger part in. And the good news is through companies like PayActive and Safwan and others, including ourselves, there are ways to do that. So there are solutions now that, in a way like automated 401k contributions, they can attack other types of problems in financial lives. For example, you can help people to save in an automated fashion into a savings account. And then when they have that emergency, hopefully they've got a few $100s there. So this wasn't there a few years ago. This is new stuff. So we want to set a challenge. Anita.
Yeah. I love setting a challenge, but as importantly, having data, sharing data, at the end of the day, I realize, oh my gosh, could there be any more droll subject than financial services and data at 4:15 keeping me from a beautiful walk in Austin on this wonderful property. But I'm hoping that, as you saw with Joe and with others, I am always awe-inspired, and this time more than ever, I'm inspired by the people that I'm talking to. And today my head started this morning, and I feel like that Skittles commercial where the brain just pops out, because we started with quantum physics and we talk about Maslow and self-actualization, and there's no place like this anywhere in the world other than all of you as leaders. So I want to think about how can we, rather than each one of us get up here and issue a challenge, whether it's Joe with open hiring or us with what we're about to say, isn't there a way to bring this together? And can't the backbone of, where's Alexander, the backbone of conscious capitalism find ways to create these synergistic calls to action? Because they're all interconnected. We're not talking about a financial situation here at Salary Finance or at Pay Active. What we're talking about is a social situation. We're talking about social change. We're talking about cultural transformations. We're talking about driving with purpose. So we believe that change starts with knowledge. And our challenge is to create a group of leaders here at Conscious Capitalism who will work together to at least get 2 million employees to measure and understand their health. Because I never understood where I was. It's no different from a diagnostic than we had at the Cleveland Clinic, just understanding our brain health. People just need to know where they are, because you can't admit where you are until you know it. So one challenge is, let's get together and at least help to educate. It all starts with knowledge, all starts with measurement. And then our secondary challenge is, as many of you know, at least half of working Americans don't have $400 in savings. Let's get courageous, let's get creative, and let's help 1 million people save at least $400, because we know if people have that cushion, they're 2.5 times better prepared. $400 may seem like a very little bit to you, but I know behaviorally, if I can get somebody to $200 and a 600 credit score, that they are on their way to control. And I know I'm not talking to a room of people that has a 600 credit. I don't know that, actually, given the invisibility. But my challenge is out to you. We have a deep dive tomorrow. We're going to figure this out together. And I think I have this crazy idea that if we did open hiring and somehow aligned this with it in terms of how they could fit together, I think we could drive some change. So I am going to leave you, because I am an anthropologist. First, I'm going to leave you with gratitude for letting me share my story. It's kind of unnerving to do that. But I also want to leave you with a fable. And it's also about bags, so we're keeping on a theme today. But there's a farmer who had these animal skin bags, and he would carry them each day, one on each side to his work. And on the way to the work, he would carry seeds. And he would trudge along with his 2 little bags. And along the way, one of these poor bags had a few little tears in it, and it would drop some seeds. And on the way back, he brought back water to his home at the end of the day in these same skin sacks. And he did this time again along this path for years. And the one bag that had slight imperfections in it kept a little bit of leakage. And at one point, that bag said to the farmer in this fable, "I'm not perfect. I'm leaking all the time. You know, you should get another bag because I'm not helping you." And the farmer took the bag back and had him walk along the path. And along this path for all these years, as he dropped seeds in one direction and water in the other, these incredibly beautiful plants had grown. And the farmer said to the bag, "Look, without your imperfections, we wouldn't have this beautiful garden. We wouldn't have these beautiful plants. So I'm asking all of you to share your imperfections, to find a way to lean in, and help us at least water a few financial plants with employees along the way. So thank you for your time today. We're super grateful. Thank you very much.